Good afternoon, everyone, and welcome to Acarda's second webinar of 2020. We hope that today's webinar can demonstrate to you how a strategic approach to regulatory reporting and data management will help you and other firms, of course, to comply with reporting obligations more efficiently and effectively. You find the recording of our first webinar on our YouTube channel. My name is Ali Mashouthi, and with my colleagues Khaled Al-Mahani and Andre L, we're delighted to be your hosts today. At Acarda, I am responsible for our global business development efforts with 15 years of experience in financial technology, consulting, and market structure. Khaled is head of product management with over 15 years of experience in risk management. Andre is our head of regulatory reporting with a PhD in physics and 10 years of experience in developing technology solutions. Looking at today's agenda, the first item that we will be discussing is leveraging RegTech for a strategic approach to regulatory reporting and data management. We will then look at the key challenges that we see when working with clients, then move on to look at Acarda solutions for data management, then solving complex regulatory onboarding challenges, and lastly, a Q&A. And for this, please do use our Q&A function throughout the presentation to ask your questions. In the past 15 years, we as consumers have witnessed digital disruptions across industries that led to significant improvements of the user experience. Prominent examples are Netflix in entertainment, Uber in transportation, and Airbnb in the leisure industry. In finance, disruptions came in phases and were often triggered by regulations. MiFID I, for example, led to the electronification and digitalization of front office trading. Disruption in regulation and back office operations functions came comparatively late, as complying with global regulations while adding to a company's cost base would not contribute necessarily to its top line. Worth noting, of course, that in addition to cost, operations and compliance teams continue to experience the growing complexity of regulations and the acceleration of the velocity of regulatory change. A few statistics are indicating that these three key challenges are here to stay and so should be addressed strategically with a long-term view. According to the Thomson Reuters Cost of Compliance Survey of 2020, 60% of the survey participants expect the compliance team's budget to increase either slightly or significantly over the next 12 months. 31% expect the budget to remain the same, and less than 10% expect a budget decrease. With regards to complexity of regulation, we've experienced that MiFID II was more complex than MiFID I and Basel III more complex than Basel II, but we can also refer to last year's Thomson Reuters Compliance Survey, which showed that the total number of regulatory alerts coming from global regulatory bodies had grown five-fold between 2008 and 2018. From 8,700 alerts to over 53,000 alerts per year from 982 regulatory bodies. An example that demonstrates the acceleration of the velocity of regulatory change is the UCITS directive. While it took 13 years to introduce an amendment to the very first directive, which was introduced in 1985, it took only 5 years between UCITS 4 and UCITS 5. So, considering increasing cost, complexity, and the velocity of regulatory change, one shouldn't be too surprised when the same survey participants, i.e. the Thomson Reuters survey of last year, when asked to predict what they thought to be the top 5 changes over the next 10 years, they voted automation of compliance to the top, followed by continuing regulatory change, enhanced role for compliance within the business, followed by culture and contact risk, and last but not least, technology risk. So when we speak with firms that are in various stages of their automation journey and that are using in-house solutions, A large number of these firms are trying to solve for a multitude of global regulatory topics with an even greater number of spreadsheets and databases. And never do we see a valid justification for this. You will, for example, have 5 companies working on the very same regulation, accessing solely their own expertise and resources, unless expensive lawyers or consultants are hired, to address a standardized topic for which the same regulatory output is expected from everyone, but not fully achieved. We should remember a regulation ought to be a level playing field and everybody should be doing exactly the same thing. We, as a RegTech company, help firms to achieve a better and more standardized regulatory output faster and in a more resourceful manner. Our clients achieve this by leveraging our assets and investments. So our investments in a secure hardware infrastructure in Luxembourg, our investment in talent, i.e. the PhDs and quants that build and manage our risk models, our compliance practitioners that horizon scan global regulations and maintain our regulatory knowledge database, our coders and user experience specialists that build our software, our industry practitioners that deliver our software as a service, and of course, Acarda's experience of over 15 years in delivering complex projects for leading institutions in investment management and security services. When implementing these projects with a client, we take a strategic view and bring in our expertise around how to future-proof the reporting process and the data management setup for that specific client, meaning we put in place a repeatable, reliable digital process that uses one golden source of data for scalability and the higher output accuracy as well as consistency. So Khaled, I mentioned 3 high-level challenges that have been accelerating the automation of the compliance process and the use of RegTech. Where do you see more lower-level challenges when you and your team work with new clients that have chosen us as their strategic partner for regulatory reporting and data management?
Well, at a granular level, there are a number of challenges that are faced by the industry in general. Data origination from different sources and formats is a very important point, which is relevant to our discussion today, Ali. I would say that regulatory and technical challenges go hand in hand in data management. When we talk about effective regulatory compliance, data management has witnessed a shift from being a support operation to gaining primary organizational importance. The horizontal and vertical expansion of regulation in the financial industry increases the influx of data flow, and managing this bulk of data from different sources appears to be a very big challenge for organizations. From my experience, data management has gained strategic importance in the regulatory environment. Therefore, the RegTech companies, which Acarda one of them, have merged to play an important role to overcome these challenges, allowing organizations to focus more on their core business. So firstly, in most cases, data collection from different sources needs to be standardized and streamlined. You have the back office gathering transaction data, for instance, that the front office applications have been producing. And you have as well associated data coming from the fund administrators or third-party vendors. In all these cases, data format from legacy systems is different. Even in these times, many organizations have manual and inflexible systems to maintain data. This non-standardized data is the root for creating further complexities in consuming and processing. Another major issue which we see is updating and maintaining existing data that is already stored in the systems. This increases efforts and costs associated with it. So organizations are reluctant to invest so much time of their time and money for changing outdated legacy systems only to be replaced in a few years. Therefore, we have seen an increasing shift in organizational strategy from reducing in-house data management to employing external data management expertise for this purpose. Next, as you mentioned, Ali, in the beginning, the financial industry has been continuously experiencing the influx of new regulations. Not only this, but the existing regulations are faced with updates and extensions in the form of new versions. I give you an example. The first version of the European MiFID template, which we call it EMT, came into effect in January 2018. And within 2 years, we have witnessed 2 versions of the EMT, with EMT version 3 being introduced last year, 2019. Similarly, we saw the introduction of new regulations for the UK pension scheme in the form of DCPT in October 2018 and ICT under the Cost Transparency Initiative last year, May 2019. So, the point of quoting these examples is that introduction of new regulations or updates in existing regulations require additional data points to be reported and change in calculation methodologies. This is a gray area in the initial stages of new reporting methods. Incorporating all these additions and modifications is not only challenging, but also requires a lot of time. For in-house changes, this proves to be a challenge due to inflexible systems. Therefore, the time to bring such reporting operations in the market is a major challenge. And due to this reason, organizations are either forced to delay compliance or to perform such tasks manually.
Okay, so manual workflows and a proliferation of data sources is reducing firms' agility to respond to regulatory change?
Definitely. And that's take us actually to the next challenge, which is the speed and access to data for quality control and oversight purposes. From a business perspective, it does not make any sense, okay, to spend time on manual efforts for accessing or reviewing data. Manual processing of data is prone to errors and time-consuming as well. Furthermore, making data available to stakeholders in an easy and comprehensible way is a major risk and major task that many organizations must carefully consider using intuitive and user-friendly RegTech solutions.
So the ideal solution would provide easy access to my regulatory data and enable me as an investment manager to leverage my data for upcoming regulations.
Yeah, so when we talk about efficiency of usage, we are referring to minimizing data redundancy. Asset managers, investment funds providers operate in multiple geographical regulations and are required to comply with a multitude of regulations. So these regulations use the same data fields with slight changes in either calculation methodology or publishing of information. An efficient solution would create synergy for minimum data collection and for already stored data to be used for new regulatory reporting regimes. For example, so DCPT discloses costs and charges information in 23 fields, whereas the ICT, which is the Institutional Cost Template, governed under the Cost Transparency Initiative, is a way more granular with 200 fields. Some of the information provided for DCPT can also be used for ICT production along with the additional fields. This requires an intelligent design to consume such information. So unusually, we can achieve this synergy through extensive mappings, but this requires a deeper level of understanding of different regulations and the usage of the relevant data fields for accurate reporting. And here finally, it's also pertinent to point out that all operations and processes have a trickle-down effect and comes down to how useful and correct a particular data is. While automation reduces manual effort, it's also important that it does not compromise on the data integrity. Therefore, it's important that digital platforms follow a transparent mechanism. This should also be reflected in a user-friendly way that it's easily understandable. Moreover, it's important that the stakeholders of the data are provided with the relevant information. In our experience, it's also useful to have a customized dashboard that provides strategic information about the reports, which can be utilized by the senior management, while the end users can view the reporting operations on a more granular level.
So when summarizing the lower level challenges you outlined, they would then be the proliferation of data from a growing number of internal and external sources, reduced agility in responding and addressing regulatory change due to inefficient and often manual workflows, lack of user-friendly means for maintaining quality control and oversight over the data management and regulatory reporting process, and high infrastructural cost inherent in managing change of tactically put together legacy solutions. Andre, what are the RegTech answers to these challenges?
Well, having talked about the challenges that any company will be facing once new regulatory reporting emerges, let's now really talk about discuss a data management approach that helps overcome those challenges. So clearly, a strategical and scalable data management solution with a long-term view is a key to solving the regulatory reporting struggles. It is very important to stress that the reporting solution that is built upon a well-structured, standardized, and efficient data management approach will be both scalable, flexible, and easy to maintain and to use. So typically, regulatory reporting process starts with sourcing the necessary data from internal systems and then providing this data either to a specialist team internally or to an external specialized service provider. Any scalable and user-friendly reporting solution must be based on a standard input. So while sourcing data is a challenge on itself, bringing this data into the required format often adds additional complication. On the one hand, and on the other hand, the service providers and even the internal reporting teams, they usually require some standardized data input from their clients. Now, Acarda's approach is to find the best balance between standardizing the data flows and making life as simple as possible for our clients. Our regulatory reporting solutions are all based on standard data input. The standard data format, we call it Acarda Master Template or AMT. And this standardized data requirements template is modular, which means the data delivery consists of several flat files that must be provided to us. For each file, so for each type of regulation, different data domains will be needed. However, there is a certain cross-section between all the regulations. For instance, portfolio master data or NAV data is needed for almost every regulatory requirement. So with a data requirement that is modular enough, certain data must be delivered to us only once for all the reports. This clearly will reduce redundancy and will simplify the data feed between us and our clients. And on the other hand, many clients will not have the ability to deliver the standard data requirements template. So transforming sourced data into is a technologically non-trivial step, which will require a lot of know-how and knowledge, technical knowledge. For this reason, it is important for us to have the ability to define and perform transformations of our clients' data with high level of reliability, high level of transparency and efficiency. So, and this is only possible if our standard data requirement is not too complex, if it's not too modular. We must keep in mind that we will have to perform these transformations for several clients who might have several fund admins each. So finally, our standard data requirements must be compatible with the industry-wide standards, such as TPT, EPT, Funds XML, Open Protocol, and others. And this is because very often data can be provided only in these templates, in these standardized formats, due to their popularity within the asset management industry. So standard taxonomies, like for example the CIC code from Solvency II or the exposure classes known from CRR, they should be integrated into the data requirement of our solution. Very often we observe that our clients are able to provide standard taxonomies in their input data already. So finding the proper balance between the sufficient level of modularity on the one hand and intuitively understandable structure on the other hand, while also taking into account all industry standards, this is a challenge that I think must be faced on the way to an efficient and scalable regulatory reporting solution. Our solution includes a data requirements template that is able to simultaneously support different regulatory reports, for example, PRIPS, AIFMD, Solvency II, CRR, VAG. Our data requirements template is evolving with time, and as the new regulations or reporting requirements emerge, they are easily integrated into the existing template. So this means in order to receive a new regulatory reporting service, in addition to the existing ones, our clients just have to add some files to the existing data feed, and that's it. So standard templates like, for example, TPT are integrated into our data requirements. The standard model which is we are using, which is underlying the standard data model which is underlying our data requirements template, is normalized only to a certain degree. So we deliberately avoided a high level of normalization because this would make it very granular and less intuitive. So another reason for keeping the data requirements structure at a comparably low level of normalization is the fact that it makes mapping of our clients' data so much easier for us. If it is provided, if our clients provide data not in our standard but in their proprietary format. And keep in mind that mapping your client's data format onto your standard data requirement is an exercise that most probably must be done at the beginning of every onboarding project. And as well, it is so much easier for our clients to understand our data requirements if we keep it not too complex, not too modular. At the same time, of course, a certain level of normalization will protect our data from inconsistencies. So at Acarda, we merge our technology solution with our experience and expertise in working with different source systems and with dozens of clients. We merge all of this to achieve the right balance between data being granular and usable. And this is the RegTech disruption you talked about in your introduction, Ali, making sense of vast amounts of data so it becomes usable and fit for purpose in a very user-friendly way.
Thank you, Andre. Khaled, so Andre summarized how Acarda addresses the challenges you outlined earlier. Can you now run through some client use cases you and your team have worked on in the past few months?
Yes. First of all, please let's keep the slide on the 11, Jessica. Exactly. So yeah, sure, Ali. For a better understanding, it would be pertinent to provide our experience with a real-life case that occurred recently with one of our biggest asset managers globally, where we managed to compile data from 9 different fund administrators. We were given limited instructions to integrate the internal data from the asset manager along with the data from these funds administrators to produce EPTs, EMTs, and DCPTs. So the challenge was to understand their the laptop battery. So the challenge was to understand their internal data management operation and design the seamless process. This involved one-to-one, end-to-one, and end-to-end mapping. With the extensive knowledge base and experience that Acarda has built over the years, we managed to create rules to map the data into our standardized master template, the AMT. After analyzing the complexity of data rules and identifying exceptional data handling scenarios, we designed customized rules for data handling with multiple special cases that had to be managed differently. For instance, for transaction data, we connected reference data points with 5 different keys to create an intelligent logic that could consume transaction data efficiently. The point I want to make here is that no matter how challenging data management might seem for various regulatory compliance, expert consulting and expertise in this scenario can provide an effective solution. Another example which can be mentioned here is how we were able to produce institutional cost template under the CTI framework. So the CTI, the cost transparency initiative, is aimed at providing comprehensive and transparent cost and charges disclosure for the institutional investors in the UK. For instance, this framework has 5 templates. 2 of them have to be filled by the asset managers, for instance, the main account template and the machine readable template, which we can call the ICT. It's relevant to mention that the CTI templates are much more comprehensive and granular than the other templates in the market. However, we had other previous regulations as a focal point. For example, costs and charges disclosures initiated with 27 fields in the EPT and 21 data fields in the EMT. And under the DCPT, asset managers have 8 fields to provide cost information, whereas in the ICT, which is one of the CTI templates, asset managers have to provide cost information for 82 fields. Considering that the asset managers must disclose all related transaction cost fields per asset class, therefore you can imagine the level of information that CTI aims at providing. After building up a very good level of understanding, we establish the data requirements to the clients to produce the ICT, which is the output. These data requirements carefully examine all the necessary data points, which can be directly reflected either in the output or data input, which would be used for calculation and transformation in order to drive necessary value in the output. Of course, the data requirement will be detailed and as specification and analyzed together with the clients in the implementation phase, so all the data points will be understood. All the data flows are designed and connected to Acarda's reporting platform, arep. So all the data points could be collected and standardized and ready to be consumed for further steps in arep process. It's important to highlight the crucial step and core of arep, which is the mapping of the data points towards ultimately the final output of CTI reports. In between, we will walk through the process of data loading, the data validation, data integration, calculation, transformation, and finally report generation. Again, each data point has a purpose, and the final output will be populated using the collected data points from our clients.
Thank you, Khaled. Andre, could you please, in the next 7 to 10 minutes, talk us through some of your use cases that you've had in the past few months?
Sure. So a case I would like to discuss is providing a new regulation for a client who already received some regulatory reports from us. So in particular, I would like to take the example of the money market funds regulation. So we saw demand for this reporting only end of 2019. Until then, the money market fund reporting was not active part of our product portfolio. But when approached by several clients who were already receiving AFMD reports from us, we went into the analysis and found that in large parts, the reporting requirements of money market funds regulation is similar to the one of AIFMD. The money market funds reporting consists of 2 templates, one of them having around 160 fields. So the reported requirements include, among others, such data points as stress test results, performance figures, and liquidity risk reporting and others. So the next step for us was to identify which data points from the AIFMD data feed can be reused for the new regulation. And the answer was, surprisingly, on average, around 75% of data can be reused. So for the missing 25%, we had to find a solution with our clients. But even without those missing 25% of data points, we were able to produce the first test reports within a few weeks. And adding the missing 25% to the data feed was that was already in place for AIFMD was in most cases a comparably simple task. So the time that we spent between the initial request from the client and provision of first reports was probably 2 months, while normally such an implementation project would take you at least half a year or 1 year. So I think another example that I can show is how to onboard a new client. How onboarding of a new client becomes much easier if your data requirements is smart enough. So let's take the situation where your new client wants to replace their old reporting solution by a new one, by ours. So let's take Solvency II as an example. We had this case with several medium and large asset managers. The situation we faced was this. Our new clients approached us with a request to provide Solvency II reporting to them, and they provided data extracts from their own data warehouse or from their fund administrators. And what we saw in those data extracts is that they already contained many Solvency II data points. For example, the extracts provided by our new clients contains the CIC code, and the CIC code is a Solvency II specific taxonomy. So probably this was a legacy of the old Solvency II solution of on our client's side, but clearly our data model, our data requirements template must be prepared to handle such cases. And if CIC code was not a part of our standard taxonomy, then first we would have to translate the CIC code into our standard taxonomy and then translate it back again if when we create the reports. So this is just a simple example, but it does stress how far-sighted your data model must be. So think also of a situation where our client is able to provide us a TPT as input format, but this is not a proper TPT and not a full TPT. Rather, what we receive is a selection of properly formatted TPT fields mixed with some other fields which are not TPT. So if our data model is not compatible with TPT standard format, we will have to do redundant work, obviously, because we will first translate TPT into our data model, and then we will translate it back again. So translating data points back and forth. And instead, of course, we should only focus on those fields which are non-standard. And because ideally only those fields will need a mapping. So our philosophy at Acarda in this respect is as follows. In the input channel, our system should be able to understand and read every format and every data point it is also able to deliver in the output channel. So be it a TPT, an EPT, or a VEG report, we must be able to produce it and to consume it, to read it. This is key to an efficient look-through process as well. Now, let me explain to you how Acarda is handling implementation projects with new clients. If a new or just a potential client provide us their data and ask us to provide a certain reporting, the first step for us is to analyze how the client's data can be mapped onto the Acarda master template. So if the client is able to create the AMT by themselves, then we only provide the consulting in the initial phase. But our team is experienced in working with several data formats and several data source systems. So after the data logic is understood and mapping onto our standard AMT template is defined, which may take some weeks, after this we are immediately able to take the created AMT format and load it on our multi-client environment and produce test reports without any further delay. So from that point on, the project will be in the fine-tuning phase. We will be improving some mapping logic. We will probably adding new features, but the ability to produce test reports very quickly after the initial exchange of data is a huge advantage, both for our clients and for us. So, and this is only possible if you're able to translate regulation into data and make data simple and transparent.
Thanks very much, Andrei. So with this then, we've come to the end of the presentation and would take your questions. But before we move on to the Q&A section, just a brief summary where we see the key benefits of using a RegTech provider, any RegTech provider or Acarda, and really taking a strategic approach to data management and regulatory reporting. So with the strategic approach, firms will increase the efficiency of data management and the quality of the data output for regulatory reporting. They will reduce time to market when onboarding a new regulation. They will significantly improve the oversight and quality control components for the entire data management and reporting process by using a central dashboard. They will reduce the total cost of ownership of data management and regulatory reporting compared to when approaching these topics tactically and with in-house solutions. So with that, we take a couple of questions, given that we are running out of time. So one of the questions is, what kind of data enrichment steps do you take when producing a regulatory report? So this is more around data enrichment.
Maybe I can take this, Ali. So if I understood the question correctly, we are talking about data enrichment from different, let's say, from third parties. So we have variety of data enrichment steps. For instance, for look-through calculations, we use Morningstar. We are collecting TPTs reports from around plus 200 asset managers for the look-through calculation, which is a big data influx from the input side. What we do as well, we have a collaboration with BM Daten and Open Funds. We have, for transaction cost calculation, we have partnership with IHS Market and Refinitiv and others as well to source the best from the best form of the data, like to get the best transaction cost calculation. Beside that, we also have interfaces with more than 20 fund admins where we receive all data fields like NAV, transactions, static data, and so on.
Thank you, Khaled. The next question is very poignant, is about COVID. So what impact will COVID-19 have our industry going forward?
Okay, probably I can take this one, Ali. So,
okay.
So we do think that the industry, of course, as a whole, was pretty much affected, greatly affected by the pandemic, because now work from home is our new normal. So there is clearly a need for a centralized data management system, centralized data management systems that can ensure business continuity while working remotely. This is very important, that the system supports your business continuity processes. And so we at Acarda, we made it quite good through Q1 reporting. We were supporting our clients' quarterly reporting processes without any issues. So the entire company was working from home for 3 months now, I think, without any disruptions. And this was a proof that having a centralized data management approach and the reporting platform is now more important than ever, I think.
Great. With that, we have come to the very end of the webinar today. We would all like to thank you very much for attending today's webinar, and we will circulate the link to the video, the slides, and of course invite you to the next webinar. So hopefully we will put together for you for the end of this year. Thank you very much.